5-minute chart is what I use the Heiken-Ashi on for my intraday trades. All right, so let's get started. First, I have to do the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose, and neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right. If you have any questions along the way, you can obviously put them right here in the question box. If I can't answer them, if you just leave your name and phone number, Rory from Right Line will get you a call back, or you can put your Skype username. Well, actually not Skype anymore. This is going to be Teams. Skype is gone. Teams is taken over for Skype, so you can use a Teams username in the chat box, and he'll get back to you and answer that. Okay, this is just a graphic. We're going to see a lot of this. This is a graphic of the SPY Super System. Now, the SPY Super System is a piece of software that I run on Thinkorswim that identifies when the institutions are trading in a trade and when they're not. This is going to talk a lot about this. This is really critical to being a consistently profitable trader. Knowing when the institutions are trading and when they're not is going to make a huge difference in your trading, and it can easily turn you from a break-even or a losing trader into a profitable one. Okay, and also I have an alert service for folks who aren't in the room or can't be in the room sometimes. When we have a trade that is a high probability trade, I send it out on a text alert. It goes out right to your phone. Usually takes about 30 seconds or so to get to your phone from the time that I sent the alert. And then we take that same trade in the trading room as well. Okay, and the alerts, by the way, we don't alert on every trade that we take in the room because some of them are too quick. I'm going to show you some trades we take which are very quick intraday trades. You can't alert on those. There's not enough time to get them out and for you to get them in if you're on the alert service. And also, I don't put out alerts on trades that I take after about 3:30 in the afternoon because it's not enough time for you to act on them. Okay. Now I'm going to talk. Let me just go over this. Now, if you've heard my webinars before, you've seen this and you've heard about it. But what drives the stock market? What drives the stock moving up, moving down, chopping around? Well, the market's made up of two groups here. These are the retail traders such as myself and most likely everybody here. We're little marbles. It's important to understand that we as retail traders cannot move the market. We just can't move the market. When we're in there trading and we don't have the institutions driving something, it's going to get a lot of chop and it's going to be a lot of chaos, and we don't want to be in there just trading against other retail traders because there's no trend of the market that you can follow. Now, the institutions, which is this big marble back here, this is the investment banks. This is JP Morgan, Morgan Stanley, Bank of America, Goldman Sachs. These are the big institutional players that have billions and billions of dollars to invest into trade, right? And they use two different methods. They use desk traders, humans just like us that sit at a desk and make trades, but that's a very small portion of their business. Most of it is coming from algos. These are computer programs that they've written that look for specific conditions in the market, technically, news-wise, whatever. They look for lots and lots of different conditions and they trade based on that. And that is what most institutions are. This is where most of the institutions come from. Now, you have to add to that for institutions hedge funds, hundreds and hundreds of hedge funds with billions of dollars, pension funds, state pension funds, police pension funds, firemen pension funds, and more billions of dollars that can come into the market. And lastly, mutual funds, T. Rowe Price, Vanguard, big, huge mutual funds, which again, billions and billions of dollars. And our job with the SPY Super System, it's the software packages, is to identify when the institutions are moving in trade and when they're not. In other words, it isn't just a matter of the institutions being in there. It's the institutions, all the institutions being in there with a large enough force to move the market in one direction. You know, if you've got one institution buying a stock and another institution selling a stock, that's not really institutional involvement. They both have to be pushing it in the same direction, and that's what the software looks for. Okay, so this is really important. Okay, because this is what separates us from the other retail traders. This one thing alone is a huge help, knowing when institutions are in the trade. Right? I'm going to focus on that a little bit. Now, here's something that you wonder why is this here? This is blackjack. This is a game, a gambling game. And a lot of people, if you've told people that you want to learn to trade or you trade, one of the things you're going to hear family and friends say is just gambling. You can't beat it. We can't win. It's just gambling. So this is blackjack. Now I'm going to use this for a little bit of an analogy, and bear with me for a minute. When I was much younger, and I mean, it was quite a bit much younger, when I was, in my teens and early 20s, I made my living playing blackjack in a casino as a card counter. This is what I did. I lived in Las Vegas, and I played counting cards. Now, card counting is very, it takes a long time to learn. It's very mental. You have to focus on the cards, and you're not actually counting individual cards. You're just determining when little cards are removed from the decks, aces through sevens, deuces through sevens, and when the big cards are removed from the deck. But that's what a card counting system does. Now, the reason I'm bringing this up is having the card counting system. It gave me a mathematical edge over the casinos by knowing when the cards are in my favor, right? And when the cards are in my favor, I bet a lot more money, and when they're against me, I bet tiny just to stay in the game. Now, trading stocks and options is very similar to that. That without knowing what the institutions are doing, the trader has no edge. So in essence, they are gambling. So if you're trading without a good methodology and not knowing what institutions are doing, you are basically gambling. But that's the difference here is the SPY super system is this is our card counting system. This gives us an edge over other traders, allowing us the ability to become consistently profitable. And I know this applies to me, and it may seem a little bit strange if you don't know what card counting is, but I just want you to understand that there's something here with the SPY super system that gives us an edge over the other retail traders, the millions of other retail traders out there. Okay, and it's just kind of an analogy, but it works. That's the key here. So we have some rules to trade by, both in the room and in the alert service. First one is we trade the best and skip the rest. We're just looking for the very best trade setups. This is important. Skipping the rest is even more important. Skipping the ones that we don't have an advantage is gonna make all the difference in the world, because obviously missing a losing trade is just as good as finding a winning trade. Secondly, our objective is not to make trades. Our objective is to make money. Both of these are meant to get you to not take too many trades. Overtrading is one of the biggest losing things that most retail traders do. They overtrade, and they just can't stay patient. They get bored, and they start to trade things that they shouldn't be trading. So our objective is not to make trades. Our objective is to make money. And that, I would think that's probably everybody's objective, but how you get there is a different story. All right, now we have to maintain discipline, and what I mean by that is we learn and follow the process. And one of the processes is to know when the institutions are in the trade and when they're not. And there's a few other criteria below that, but that's the number one criteria that you need to have. Second thing is to remain patient. Probably the hardest thing for retail traders to do is to remain patient. If you're sitting at your computer and you've been trading, and then you haven't been trading for an hour or so, you haven't found anything to trade, you get antsy and you start to look for trades, and you start to justify reasons for getting into a trade. You can find all kinds of ways to get into trades just so that you can trade, but it's very important to remain patient and only take the best ones. Wait until the trades come to you. Okay, all right, so as a profitable trader, we need an edge over other retail traders. That's who we're trading against, other retail traders. And our edges are the SPY Super System software. This is the software that tells us whether the institutions are in the trades or not. All right. The next thing we look for when we find some stocks where the institutions are pushing it, we look to trade relative strength and relative weakness, an extremely overlooked criteria. Most retail traders do not understand relative strength or even think to use it. And relative strength is not RSI. Relative strength is how is the stock that you're thinking of trading, how is it trading versus the SPY, the S&P 500. The S&P 500 is moving sideways and up, and you've got a stock that's stacking red candles, then you've got relative weakness. That stock has got relative weakness, and that's a good short, and vice versa for the long side. This is important, because if the market turns against you, it goes from one trend and starts another trend, then you're not going to get hurt as bad. In fact, you could probably still maintain a profit because your stock has been outperforming the SPY now, so it's not going to turn around as much as the SPY does. A very, very underappreciated criteria. And trading with the market trend, if there is one, a lot of the days we've had here lately, there's not been any trend, so you have to rely on the SPY super system, whether institutions are in there or not, and relative strength and relative weakness. And the last one is to buy near support and sell near resistance. Don't be chasing stocks that are running up or running down violently. That's where FOMO comes from, the fear of missing out. It's important to wait till the stock comes to your support level. Like if you want to go long and the stock's moving up, don't chase it. Wait till it comes down to a support level, such as the volume weighted average price, the VWAP, which we'll talk about, and bounces off of there. So buy near support, sell near resistance. Really important. Okay, now this is kind of we're going to talk about what used to be called the Compass system. It's now called the SPY super system because we've added some enhancements to it. But it identifies the highest probability setups while sidestepping setups that look good and will fail more often they succeed. And how does it do this? It identifies when institutions are driving the move and when they're not. This is really critical. It analyzes a lot of complex data. It's looking at momentum, it's looking at trend, it's looking at money flow. But the Compass system analyzes the complex data and displays the results in an easily identifiable visual format. So the SPY super system is the Compass system with some enhancements to it. And again, this visual element makes it possible for even new traders to identify high probability trade setups, all right? And all of the trade setups that we take and all the strategies we take, I have videos on every single one of those. So if you become a member of the room, a member of the alert service, or you buy the software, you get all those videos so you can see exactly how you use these criteria to make yourself profitable. All right, so how do we get an edge over retail traders? Well, we're only taking trades that are being driven by the institutions. Again, here we know we're in trades when the institutions are in the trade. We take trade stocks that have relative strength or relative weakness versus the SPY or the Qs, that's the NASDAQ and the S&P 500, and trade in the direction of the overall market trend. And it gives us an edge because our trades are going to be supported by institutional buying or selling. It will be outperforming the index, and they're moving in the direction of the overall market. If you follow these three things here, you're going to have an edge over 95% of the other retail traders that are in the market trading against you, because you're taking money from retail traders. You're not taking money from institutions. You're not going to beat the institutions, but the retail traders you can beat every day if you know more than they do and you have better software and you've got better analysis, better methodologies than they do, which is exactly what separates us from the rest of them. Okay, now I just again want to emphasize something about the SPY super system software itself, because we have a methodology called SPY super system, but the actual software that runs on thinkorswim, all right, and you don't have to trade on thinkorswim. I just use it on thinkorswim to identify my setups, but I trade on Tradier. But the SPY super system software, it's the critical element in finding and trading the highest probability trades, okay, because the SPY super system is the engine that drives our exceptional results. When we go over the results that we've had over the last couple of years, I think they stand out. I mean, they're extremely good results. But you have to understand it's the SPY super system software that is the main reason for this, okay? Because it's the engine that drives our exceptional results. Again, the ability to identify when institutional players are driving a bullish or bearish move and when they are absent is the key factor in pinpointing high probability trade setups. Okay, so it's very important to understand that. And again, that's the function of the SPY super system software, and it's a critical component. So everything we go through here, you have to understand that the software, the SPY super system software, is what's driving these results. All right, so this is and before I get into the Heiken-Ashi, I just kind of want to show you what the SPY super system software looks like on thinkorswim. This is a graphic of the SPY super system. This happens to be the Qs on a 5-minute chart, but it doesn't really matter. But these are the key elements on here. What you've got is this bottom indicator here is called the current time frame momentum, right? The second one is called the multi-time frame momentum, and the top one is the long-term trend. These they show up in colors. They can be red and yellow for bearish, blue and green for bullish, and we'll see that as we go along. And this is the actual oscillator that's generating that. All right, and the way that we look at momentum is what makes a difference here. I'm not going to go into details, but how you look at momentum and how you look at trends are going to tell you whether institutions are trading in that particular instrument or not. Now on the chart itself here, we have a couple of things that are important. On the 5-minute chart, this is the volume weighted average price. So if you're trading intraday, this is going to be your support or resistance level, or you're going to use the 15 EMA right here. So we've got two support and resistance levels that we enter and exit trades from. This white line is a pivot point. It's a great indication of when you're getting close to that and you've got profits, it's time to start to take some. And then we have these little arrows, which are called pop symbols, that pop out of the box. These tells you when a stock price is breaking compression. To the upside is pink, and to the downside is blue. So this is what the SPY Super System software looks like. This is what it looks like when it goes on your Thinkorswim platform. If you buy the software, it's going to look exactly like mine. All right, but these are the indicators. I'm going to show you a couple of charts here before we move along, just so you can see this in action. This is a trade I took yesterday on Tesla. This is here are our indicators. Now this is a 5-minute chart. So the only thing I was looking at on a 5-minute chart, I was interested in this, the current time frame momentum right here. All right. Again, you can see the colors change. Blue is bullish, yellow is bearish, red is bearish, blue is bullish. When it switches from red to bullish right here, you can see it went from red to blue. If you look at the price action right here, you notice that the price action broke above the 15 EMA and right through the VWAP right there on that candlestick. All right, so this is where I took the trade. As it broke through right here, all right, I took this trade and I rode this trade up. And you see how as long as it stays above the VWAP, I'm staying in the trade and I get out right up here. This was really good. It was about a $2.50 profit, $250 profit per contract on the options that I took. But that's how we use the software. You can see it was bullish and it stayed bullish, and then it switched to bearish. You see this? And again, you would only trade this long if it's above the VWAP, and only trade it short if it's below the VWAP. I just kind of want to show you that, what it looks like. So this is what the software looks like. All right, here's another one right here. This was a SPY, and this is another SPY trade. This is from Thursday. I believe, yeah, I think this was from Thursday. But again, you can see how we went from selling, yellow, buying, blue right here, right? Yellow to blue. Where's the price? Breaking above the VWAP. Got to pop out of the box symbol. We're breaking compression. You buy it right there, and you take it, and you get out right there. And that was the trade I took on the SPY. Now, and this was Wendy's. This is a daily chart. This shows you how we trade for swing type trades. And this was when we had a swing in just a few days ago. And you see how it's all red, the trend. Now on daily charts, we have to use the multi-time frame and the current time frame. But here's all your red. Everything's selling. The institutions are selling. We buy it here. We sell it here. Made a nice profit on Wendy's right there in just that overnight trade. But you can see it's all telling us to sell. So that's what the SPY Super System tells us and lets us know when institutions are in the trade and when they're not. Right? So really important. Okay. Now this is a kind of a graphic depiction of a trader who doesn't understand how to find high probability trades and is just trading randomly. This is what emotion is like. What we do with the SPY Super System software and with our methodology is we take as much emotion out of trading as possible. That's a person who doesn't have the SPY Super System, and this is a guy that does. It's a big difference. If you've traded before, you probably felt these kind of emotions. And it's very important to try to keep emotions out of your trading as much as possible. It's impossible to keep it completely unemotional, but that's really important. All right, so this I'm just gonna kind of run through quickly here, but what I'm trying to point out here is you have to have a methodology that you understand, like the SPY Super System software with the criteria. You have to learn how to find high probability trade setups and strategies, and you have to do that and focus on that before looking at results. And the whole point of this particular slide is to keep you from just following your P&L and making judgments about how your trading is based on what your P&L is like. You can make some winning trades that are terrible trades. And if you keep doing that and you're going to develop bad habits, it's going to come back and bite you in the end. So it's important to understand the criteria for finding high probability trade setups before you focus on your P&L. Because if you focus on your P&L and use that as a guide as to how you're doing, you're going to end up in failure. I've seen it happen to so many retail traders. Right, and one other little thing, this is just kind of informational. You may have heard of this, you may have not, but when you get a copy of this, you can just kind of look at this. It's called the OODA loop. It's called Observe, Orient, Decide, and Act. This is basically a process that is being used in most businesses and in the military, but you could obviously use it for trading. First, you observe. You use your scans and watch lists and news to identify prospects. Then you orient, which means identify whether the prospects meets the high probability criteria on the daily and 5-minute charts. Are the institutions in this trade? That's how you orient. Look for support and resistance levels, know the next earning date, and check the option chain for pertinent information. All right, so you observe and then you orient, then you decide, then you make a decision on whether this trade qualifies as a good high probability trade setup. If it doesn't, if it's one you want to take, you act. Try to avoid analysis paralysis. You go through process, you decide you like it, act on it. All right, it's called OODA, and it's an easy thing to kind of follow. All right, this is the basic high probability trade setup funnel. This is the criteria that we go through. First thing is the SPY super system must align, obviously, but you also want to look, and I put this at the top because most traders, retail traders, don't understand that you've got to look at your daily chart first if you're going to take a trade that you're going to be in for more than 5 or 10 minutes. You want the daily chart to be bullish if you're going long and bearish if you're going short. If you're trading against the daily chart, you're going to get in trouble because you can't stay in the trade. It takes all your flexibility away. So you look at the daily chart and the 5-minute chart, trade with the trend if there is one. So if the market's trending up, you kind of want to look at longs. If it's trending down, you want to look at shorts. Then when you look at the SPY super system, does the SPY super system align? Do you have green or blue if you're trying to go long and red or yellow if you're trying to go short? That's got to align. If this doesn't match, you're out. You're not going to take that trade. Then you look for relative strength and relative weakness and trade the stocks that have relative strength if you're going long, relative weakness if you're going short, and then enter near support, sell near resistance. This is the whole basic criteria trade setup funnel. All right, it doesn't sound that complicated, but if you follow these steps, it's going to make a massive difference in your trading. All right, and again, this is the funnel method for the highest probability trade setups, just kind of written out. Again, number one, SPY super system indicators must align in the direction of the trade. The software is going to tell you that these things are bullish or bearish. Okay, and the stock to be traded should have a daily and 5-minute chart aligned. And then the other ones we just talked about here. One thing to know about when you're trading, the 5-minute chart, if you're trading off the 5-minute chart, intraday trades, the stock price should be above the VWAP if you're going long and below the VWAP if you're going short. The volume weighted average price, which I'll show you on our chart, is a pink line, is all the institutions use it, which is why it's so critical. All the institutions use that VWAP for entering and exiting trades. So that's what we want to do, is follow the institutions. So between the SPY super system telling us whether they're in there or not, and using the VWAP knowing that they're going to use that as well, that's all we're doing. We're just following the institutions. Have patience, please. Okay. In the room and in the alert service, these are the strategies that we use. We do straight calls and straight puts. We do straddles and strangles. And if you don't know what some of these are, don't worry. There's videos and all of them. They're different strategies using options to trade based on the market conditions. Straight calls and puts, straddles and strangles. These are non-directional. Don't care which way the stock goes. Debit spreads, usually weekly options expiration. We do time spreads over earnings. These are non-directional. This just allows us to sell premium and collect premium when the volatility come out of the options. If you know if you've looked at an option chain, when earnings are coming out, you notice that the premiums are much higher than they usually are. The market makers jack up the premiums on the options because they don't know what the earnings are going to be. They don't know which way the stock's going to go, and they don't know how much of a move it's going to make. So they make the option premiums really, really high, and that's called the volatility that they add into it. When the earnings come out, the market makers then reduce the premiums because now they know which direction it's going to go and about how much it's going to go, and that's called volatility crush. And this time spreads that we do over earnings, what that does is it harvests the volatility crush when it comes out of the options. All right, and then I have a weekly ATM strategy. This is for basically neutral to bullish markets. We really haven't had that lately. Haven't done an awful lot of these lately, but it's a great strategy when the market sets up for it. And then we do credit spreads to capture premium over a few weeks. And this one right here I've got in yellow. This is called the SPY Super System. Now, this uses the SPY Super System software, and we have a methodology called the SPY Super System. These are very quick trades, trading the SPY, the Qs, the IWM, or if you prefer futures, the ES, the NQ, on very, very quick trades using 5-minute charts. Typically, you're only going to be in there for 2, 3, 4 candles. You can maybe 5 or 6 if they have a nice trend, but these are called out in the room. We don't alert on these, but these are a lot of people in the room are making a lot of money off of these by trading these. Okay, we'll show you how those work. And we have the alert service just so I can kind of quickly tell you what it does. Again, it's designed for day trades and short-term swing trades. Day trades, short-term swing trades to me is anything that's overnight or out to about 3 weeks. Designed for traders who can't watch the market all day. You're gonna get alerts on the highest probability trade setups. What are those? Stocks that the institutions are in. And also we look at market internals and we look at technical analysis to further hone down that selection. Okay. All right, and this is my equity curve. This also includes the SPY Super System trades, and I have to be, let you know about the SPY Super System trades. The results I have for the SPY Super System trades, when you see the results, those are based on my trades because I can't alert on those. But it's the ones I take in the room, and I tell people that I'm taking these, or I tell them that they're set up. But it's included in this particular equity curve, so it's fairly lucrative. Okay, now since we've covered that, I'm going to put the Heiken-Ashi candles right here, because I know a lot of people probably came to hear about Heiken-Ashi candles. So we're going to how to trade using Heiken-Ashi candles, how to improve your trading. All right, and let me just take a sip of water before I get going any further. All right. All right, the SPY Super System live trading room. Okay, how we use Heiken-Ashi candles. Now, I'm going to show some graphics here. This says British pound, Japanese yen. Doesn't make any difference. Could be Qs, the SPY, could be gold, could be anything, could be Tesla. Doesn't matter. But what's important here is the structure of these candles. These are Heiken-Ashi candles. Now, Heiken-Ashi candles you identify bearish and bullish pretty easily. A bearish Heiken-Ashi candle has a flat top. It always has a flat top, right? No wicks on these things. Flat top, flat top, flat top. This is a bearish Heiken-Ashi trend. You can see continuing flat top candles all the way down. Now, if you notice, each candle starts in the middle of the previous candle. They always start in the middle of the previous candle, right? Because they're made up of 2 candles. But this is a bearish trend on Heiken-Ashi candles. You can see how easy that is to see this trend. See, no upper shadow. Bearish Heiken-Ashi candles. What we're looking for when we're trying to trade intraday, or even for swing trades, is we're really looking for what's called the Heiken-Ashi reversal. We're looking to reverse a trend back into the trend that we want to trade. So this is a bearish trend right here. You see the candles coming down. See, they're getting smaller. And then you start getting wicks and tails, and the candles turn green. So then you go with a flat bottom. This is a Heiken-Ashi reversal to the bullish side. This is a bullish Heiken-Ashi reversal. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. This is the one main thing you want to at least get out of this, is Heiken-Ashi candles have flat bottoms and flat tops. Flat bottoms are bullish. All right. Now, to treat this as a reversal, it's really kind of important that the Heiken-Ashi candles to the reversal side should be about at least as big as the ones we're coming down. So I wouldn't consider this a good reversal because these candles are too small relative to the size of the candles coming down, right? But this is a reversal, but it's not one. I mean, you would have made money on it if you bought it here. You notice you had flat bottom, and then you start to get wicks and tails again. But this over here is where I identified a real Heiken-Ashi reversal to the bullish side. We're still coming down. We get a big candle with a flat top. Heiken-Ashi. This is Heiken-Ashi bearish reversal. Continuation of the Heiken-Ashi bearish trend. A wick and a tail, and then a flat bottom on a big candle, moving up right here with a flat bottom, and that is your Heiken-Ashi reversal to the bullish side. So if you were trading and you wanted to go with this, if you wanted to be long this particular instrument, this is where you would take it, right there on this flat bottom. And these candles, by the way, if it's a 5-minute candle, once they're about 2 or 3 minutes into the candle, that the likelihood of this not having a flat bottom is very, very small. In other words, after about 2 or 3 minutes, you can enter the trade based on the flat bottom that's been created, right? So this is, here's your trend: flat bottom, flat bottom, flat bottom. There's no reason to exit this trade. Flat bottom, getting a wick in the tail. So we just kind of watch and see what happens. Still green. Flat bottom again, flat bottom, a flat bottom. This is technically called a Heiken-Ashi bullish continuation, when you go with a flat bottom to a wick in the tail and another flat bottom. But you can see that now. So this is what Heiken-Ashi candles are, all right? Flat tops for bearish, flat bottoms for bullish. Reversals goes from flat top, for example, for bearish, to dojis and wicks and tails to flat bottoms. And that is your bearish reversal. Okay, so any questions on that? That's really important. How do I determine where to place the stop on a Heiken-Ashi reversal? Well, if Robert, the strategy itself is, when you're entering the trade, you should be entering off of some sort of a support and resistance level. In other words, if this was a 5-minute chart, and let's say the VWAP was right in here somewhere, and you get into the trade as it breaks up through the VWAP on a Heiken-Ashi candle, but the VWAP is your support or resistance, you would set your stop at just below the VWAP. If you're using the 15, it would be just below the 15. You know, and if you were using a daily chart and you had like a 200-day moving average that was breaking up through, then your stop would be just below the 200-day moving average. It's whatever your entrance is based on as far as the support and resistance level. Okay, just like you would do with anything. It's just that the Heiken-Ashi candles are giving you a confirmation that the trade has confirmed that it's reversed. All right, so if you haven't used Heiken-Ashi candles in your technical analysis, you might want to try using them. They improved my trading dramatically. But I mean, there's nuances to them, but we'll go over. And again, I'm not gonna go through everything I've got here written down. This is an article I did for Reddit quite a while ago about Heiken-Ashi candles, but it does mean average bar in Japanese, because there's 2 candles that make up a Heiken-Ashi candle. Again, bullish Heiken-Ashi candles have flat bottoms, really important. Bearish Heiken-Ashi candles have flat tops. Bullish trends will have flat bottoms, Heiken-Ashi candles, one after another, stacking up. And bearish ones will have flat topped Heiken-Ashi candles. And we're going to just look at some charts with these so you can see. Again, generally you can stay in a bullish trend as long as no flat topped Heiken-Ashi candles appear, indicating a lull or reversal in the trend. All right, and again, a reversal in a bullish trend will have flat bottom Heiken-Ashi candles, followed by smaller doji candles, as we saw, and then you're going to be followed by the flat top bearish candles. That would be the reversal of a bullish trend. In other words, you'd be going up, and then you get some dojis, and then you get a flat top candle. That's a Heiken-Ashi candle to the downside. All right. And again, I do want to kind of iterate this. Once you have a Heiken-Ashi reversal, the first thing that needs to be true is the Heiken-Ashi candle height has to be at least as large, preferably larger, than the prior candles that occurred during the reversal. In other words, if you get big, huge red candles coming down, you don't want to jump into a Heiken-Ashi reversal on little bitty Heiken-Ashi reversal candles to the upside, because you don't have enough force. You might have to wait for a few. And the rest of this stuff is just relative. The stock should also be a stock with relative strength. Basically, what we're saying is, once you've got a Heiken-Ashi reversal, make sure you use the other other criteria that we use for high probability trades. Okay, you know, the SPY super system needs to tell you that the institutions are in there. You want to be breaking out of a compression or breaking below a compression. All the same things. Again, Heiken-Ashi candle comes from Japanese candlesticks. Actually, the calculations, they combine the open closed data from the previous period with the open high low closed data from the current period. That's how the calculation is done. All right. And again, the fusion minimizes market noise. This is what's really important. Heiken-Ashi candles are gonna reduce a lot of the noise that you get by looking at regular 5-minute candles. A lot of folks get shaken out of trades because they get a kind of a red Heiken-Ashi, a red regular candle on a 5-minute chart that looks ugly to them. So they bail on the trade, whereas if they had just waited for the next candle, they would have been all right. The Heiken-Ashi candles forces you to do that. Okay, so again, a flat bottom candle in an uptrend signals a strong visual of the current uptrend. So here we have the bearish ones, flat top, flat top, flat top, little candles, little bitty candles. Here's a reversal. This is like we looked at before, but it's not very big relative to this. So you kind of wait and you see how you chop around and you come down again, and then you get a break. Now let's say this was your VWAP, this purple line right here. Here's your flat bottom candle breaking above the VWAP. This is where you would enter this trade, right? You're breaking above it with a flat bottom candle. This is a Heiken-Ashi reversal that's being confirmed because it's a Heiken-Ashi candle. Heiken-Ashi candles, by definition, confirm a reversal because it takes 2 candles to do it. Unlike a regular 1-minute candle, a 5-minute candle with one regular candle, it doesn't do confirmation. You have to watch multiple candles to do that. This gives you the confirmation. So it breaks above that VWAP, for example, and then you can just see, I can just write it up because the VWAP would become your stop, and then you would just be riding it up on momentum. As long as you get flat bottoms all the way up here, there'd be no reason to start to exit. Here you would start to think about exit. If it was me, I'd probably be out right here on this candle. But you know, if you wanted to give it more time, you could. But you have to have some sort of a trailing stop or something in here. And then here we go with the wicks and tails and the flat top. There's a bearish reversal. You're out of the trade. All right, so you see how smooth that trend is, and you can see how easy it is. All right. And again, tips for using Heiken-Ashi: make sure you know where your support and resistance levels are. If impacting potential gains, what I mean by that is if you're going into a trade and the 200 simple moving average on your daily chart is 10 cents above where you're trading, you don't want to go into the trade. You don't have enough space to the upside. All right. Again, so you want to align the trade with the current market trend for increased success if there is a market trend. All right. And again, I do monitor Bollinger Bandwidth. That's just to let me know if I'm getting a compression break. Okay. All right, so that's kind of and you'll get all this on the recap. So I don't want to go into it too much more detail, but that gives you what you need to know about Heiken-Ashi candles. Flat top Heiken-Ashi candles are bearish. Flat bottom Heiken-Ashi candles are bullish. So again, this recaps the advantages. It smooths out the price action, reducing noise. It also is going to take some of the emotion out of the trading. You're not going to get so freaked out by some off-the-wall candles that come through. Makes identifying trends much easier, as we saw. It improves identifying confirmation of trends and trend reversals. Again, the Heiken-Ashi candle, by definition, is a confirmation of a reversal once you find one, because it's taken 2 candles to do it. And again, it helps identify potential exits when the candle bodies shrink or the reversal occurs. All right, so that's Heiken-Ashi. Now, I'm going to show you a couple of graphic charts, and I'm going to look at some real charts here. This is a chart on Uber back from last couple of years ago. Doesn't matter. You can see that these are regular candles here. Gap up, and this is my TC2000 charting program that I use for my charting. But if you can see on here, I color them blue because the Bollinger Bands are expanding. I know I got a compression break, but this is a standard chart on Uber. This is a Heiken-Ashi chart on Uber, right? So over here on the first, you see this gap up. Whoops, let's go here. You see this gap up here? If you go back here, you notice on the first, there's no gaps. Heiken-Ashi candles don't have gaps. The gaps are filled. But on this particular chart, if you were looking at this, you see this flat bottom candles on Uber coming down, bearish, 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 wick and a tail, flat bottom candle with a big candle length. That is a Heiken-Ashi reversal. This is where you would enter the trade, right there on that candle. This is a daily chart, but you would enter the trade right there somewhere on that candle, and then you've got flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. Just a nice trend with flat bottoms here, but the candle's getting smaller, 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 and you're out when this happens. All right, that's how you find Heiken-Ashi, and this would be a swing trade because this is a daily chart. All right, for intraday you would use a 5-minute chart. Or is that easy to see now? You can see, and again, don't have any gaps over here. Looking at this, you'd say, oh my God, I'm chasing, but see, we got it right here on the first. This is you would have caught that big second gap up. All right, so we're going to take a look at some live charts here. I've got a few that I want to look at. And I'm going to bring over my TC. First, I'm going to look at my TC 2000 chart, and then I'm going to look at the SPY Super System software. The reason I'm going to do it here on TC 2000 is because it's a little bit easier to see the particular charts, because I have more on the daily. I have more lines on here than I do on the SPY Super System software. Okay, so this is ACAD is the first one I'm going to look at. This is a Heiken-Ashi reversal right here in ACAD. All right, see the little tiny candles? This was actually earnings. See the flat bottom, flat bottom. And for me, this is important because this is a 200-day moving average is the purple line, the 100-day is the blue line. But for any all intents and purposes, that's a breakup. If I look at it Heiken-Ashi, see what I get here? I get a little bitty tail on this candle right here. Now I get a flat bottom, big flat bottom candle yesterday. That's an entry for a Heiken-Ashi reversal trade right there. So on Monday or even yesterday, you could have taken this right there on that entry. All right, because there it is right there, and that's where you would be in this thing as it breaks above the 100-day moving average. All right, so that's a Heiken-Ashi candle on ACAD. JMI, this is a cheap stock, inexpensive stock, but there you go. There's your Heiken-Ashi reversal candle right there. Okay, doesn't look like a lot, but it moved up beautifully. And again, this is another entry right here. You see no gap, but this is where you would be entering on this on Monday because you got a Heiken-Ashi reversal candle. HTHT is also another long. All right, and you can see these are the Heiken-Ashi candles. Now this is a long because it's a continuation of the Heiken-Ashi. Oops, that's wrong. Sorry, the wrong chart. HTHT, here it is. All right, there's your Heiken-Ashi reversal. Now this is actually a Heiken-Ashi confirmation because here's the original reversal, right? Wick and a tail, flat bottom, flat bottom, flat bottom, wick and a tail, a little bitty tail, and now a flat bottom. That is a Heiken-Ashi reversal on the daily chart on that particular stock, HTHT, and there's the actual chart right there. All right, and let's take a look. One probably everybody knows, Tesla. This is a regular chart on Tesla right here. It's kind of been all over the place, but notice it got above the 200-day moving average yesterday, the purple line. If we switch to Heiken-Ashi, there's your Heiken-Ashi reversal right there, and this is a continuation of it. Nice long right there. Okay, so that's what Heiken-Ashi looks like. Now, I'll show you one more, and this would be a good entry for Monday if it's bullish. Amazon. Here's your Heiken-Ashi reversal Thursday, continuation on Friday. Let's go to the regular charts. There it is right there, moving above the 50-day moving average with quite a bit of room up here to the 200-day. Okay, so those are the longs that I came up with on here. Now a couple of shorts would be T-Mobile. All right, there's your regular candle. There's a breakdown below the 100, and here's your Heiken-Ashi candle. See, it's moving up, flat bottom, flat bottom, flat bottom, flat bottom. Doji, flat top with a fairly good sized candle here. That's a Heiken-Ashi reversal candle to the downside, a bearish trade right there on TMUS. All right, SG is another one. All right, they had earnings. Look at the size of these candles, flat top. And again, these are pink because I code them pink in TC 2000 to identify the breakage or the break of a compression. These are coming out of compression. But again, you see here's was entry here. Notice you had compression, flat top, flat top, flat top, flat top. You could have caught that move right there and you'd be out right there. But here's another entry, potential entry for it right there. All right, and one other one that's a fairly big name is a firm, big Heiken-Ashi reversal yesterday in a firm. All right, there's the Heiken-Ashi, there's the regular candle, there's what it looks like. Okay, so that's a Heiken-Ashi reversal. A firm is a good short setup for Monday. Okay, so those are what the Heiken-Ashi candles look like. One other short, by the way, that's a nice one is Match, beautiful one there. Now I'm going to switch to. Does anybody have any trades stocks they want me to take a look at while I've got this chart up? I'd be happy to if you had any just one or two stocks. I'd be happy to look at them for what the Heiken-Ashi setup is on them, because you may have some stocks that you've been watching. SII, Thomas, SII, is that the right code? The SII, okay, yeah, beautiful Heiken-Ashi cake. There's the regular chart. Nice breakout on Sprott. Earnings not till 8.5. Heiken-Ashi right there. Yep, you get it. You actually had the reversal right here. A nice, very nice chart. That's a very nice looking one right there. Carol coin right there. It Heiken-Ashi reversed right here, and now you've got a little bit more question mark as to what's going on. If I look at the regular chart on coin, and you know coin is very, very volatile, but see if I look at this and I see this kind of stuff, I'm not going to touch it long right now. It's right down here, and I'm not going to touch it long. And Lily, there's a regular handles in Lily. There's Heiken-Ashi. You had a big Heiken-Ashi reversal right here and a beautiful downtrend. If you caught this right here, you've been in beautiful shape. This was earnings. Caught this, you made some really nice money on Lily on something like that. I'll take a look at one more, Stephen. Bull, Web Bull. Okay, there's Web Bull right there. Haven't got enough much history on Web Bull, but if we look at the Heiken-Ashi, you can see what you've got here is here's your Heiken-Ashi reversal right here. So it's bullish right now. This thing is very, very volatile. I mean, look where this goes. That's almost $80 up there, and this is almost $10. This stock is extremely volatile, but that's bull right there. Okay, now I want to show you what the difference here is looking at the SPY super system, because if we look at SPY super system, again, as I showed you, when we took Wendy's, we were looking at the daily chart. Here was Wendy's right here to the downside. All right, and you notice that it was all red here. All of the trend, the multi-time frame momentum, the current time frame momentum, all red. Okay, so it's a nice short setup, which is why we took. But let's look at some of the ones we just talked about over here. Let's look at ACAD. All right, so is ACAD a good long setup? Well, it is. All right, so we knew we had a good Heiken-Ashi reversal on it, but see what I'm confirming here is the multi-time frame momentum is blue, which means bullish. It just went from yellow to blue. Current time frame is blue. Institutions are buying ACAD. All right, that makes it a good trade for me. All right, JMIA also green and green. And again, the long-term trend, I use this sometimes for confirmation, but not to override these two. So this tells me JIMA institutions are buying it, and they've been buying it on the current time frame for a long time here, right? So there's a bounce up right there in JMIA, right? So this is the SPY super system telling me that if I find a Heiken-Ashi reversal, what's the stock look like? Is it a stock I can take based on the fact that the institutions are in there? HTHT, I can. And you notice HTHT just switched from long-term momentum. It just switched from multi-time frame momentum, just switched from selling to buying yesterday. So this is the perfect entry for HTHT, all right, based on these criteria. And if I look at Tesla, is it a good long? It is. See that both the current time frame and the multi-time frame both switched to bull yesterday. The institutions have been buying and selling, but it's been mixed all the way along. We finally get two blue candles here. So if this thing opens green on Monday, it's a long. All right, this really simplifies things, because now you've got knowing A, you've got Heiken-Ashi reversal, B, you've got good setups, and C, you've got confirmation that the institutions are in the trade. Really, really important. All right, so that's that, and let's look at Amazon to see if that confirms. And Amazon confirms as well. We get green here, current time frame momentum they've been buying. And now it just switched over to the multi-time frame momentum is also buying. All right, very, very important. And if we look at the shorts, let's see if the shorts work. Temis, is that something I'd want to be short? I would. Notice we just went from buying to selling on Temis just yesterday. The multi-time frame was already red. We take it short. Again, based on how it opens on Monday morning. SG, same thing. Okay, so I hope you're getting the idea here now of how these look. Okay, there's confirmation that the institutions are selling SG right there off of that. So this is what we use for setups. This is what gives us such a huge edge over other retail traders. We now know how to use Heiken-Ashi candles. We now know how to find out if the institutions are in the trade or not by using the SPY Super System software. Big, huge edge for us over this kind of stuff, right? Really, really important. All right, so anybody just want to throw another stock up there? I'd be happy to look at it. I gotta need to move along here because I don't want to take up all of Saturday. Okay, so let's go ahead, switch back to the webinar. All right, so we looked at some Heiken-Ashi candles from Friday trading. Now I'm going to take a look at what I want to do now is I want to look at the results. Now, this is important. The results I'm going to show you are these are real results, and they're good, really good results. I want you to understand how we're able to get these kind of results. All right, these are not just random results. These are all based on high probability trade setups using the SPY Super System software to tell us if the institutions are in the trade or not. All these trades will have been confirmed that the institutions were trading. All right, so in 2023, using $2,000 per trade in the room, we produced a profit of a little over 60,000. All right, for now the rest of the stuff doesn't matter. It just tells you how much of your account you would have been using, but 4% to 2%. On 2024, 2,000 in each trade would have produced about 55,000, just a little bit less. And a lot of the profitability is dependent upon what kind of a market you've got. Trending market, you can stay in the trades longer. You got a choppy market, you can't stay in as long. Okay, and this is just something I wanted to notice. If you remember what happened when the tariffs went on and then the tariffs were paused, there was these huge moves in the market. The Dow moved up and down 3,900 points in 2 days. But while the market was down that particular week, the market was down, SPY was down 10% in 2 days. The only trades we had on were these 4 trades. We had 4 trades on in the room and on the alert service. We had Broadcom, ABGO. We had entered for $75 a contract and we closed it for 104, 39% profit. So 2,000 invested produced 754. We closed Nike. We get in on that at 328. We get in for $285 a contract. We closed it for $9 a contract, $216 profit. And this was because when they put the tariffs on, we had Nike short, and Nike produces all of their shoes and sneakers and et cetera, running shoes over in Vietnam, and they were going to slap a 38% tariff on Vietnam. Nike just dumped, and so we were able to get in for $285 and out for $9. Big, huge profit. That's the biggest percentage trade gain I've had in the last couple of years. I don't usually get this kind of big gains. And then we also had a Sareptaron, get in for $450 per contract, closed for $8, 78% profit. And we had NNE, entered for $1.80, closed for $2.25, 25% profit. So again, 754 profit, 4,300, 1,400, and 495. These are the only 4 trades we had that week. We had them on, we closed them all while the SPY was down 10%. Just want to show you the difference here. Have I traded the Qs and how did I do? Yeah, I trade, I trade the Qs in the SPY and the IWM. What I do is when I do intraday, quick intraday trades, I look at the indexes, and if I'm going to go long, and let's say the SPY is up 1%, the Qs are up 1.5%, the IWM is up 0.8%, I'm going to go long the stock that has got the biggest gain for the day. I'm going to take the strongest index and trade it, as long as I don't have any kind of resistance level above that's going to block it. But yeah, I trade the Qs all the time. I'll take the Qs, I'll take the SPY, I'll take the IWM. All right, so I'm going to run through these really quickly. This was January 2024, but the whole point of this is to obviously, I'm not trying to impress you with the wins we've got here. What I'm trying to do is kind of impress upon you what we get for gains, right? It's really important what we get for gains here. We get, we don't get 200, 100, 200, 300, 4%. We get 43, 37, 32, 25, very consistent wins. And we have losses. Remember this, we have losses. I had one losing month in 2024. It was in September, and I'll show you that. But these are the trades we took in January. And the number of trades we take is going to be dependent upon the market. But we did have a loss in Gilead, but now we had a 90% win rate, made it 75.05. It's February, same percentages you can see. They stay within the same range. This was our best month last year. I've been putting 2,000 in each trade, produced a little over 11,000 in February. And the alert service produced about 7,000. All right, here's May, and again, these time spreads, were on earnings. I use this when I'm going over the time spread strategies. But again, notice that the consistency in the wins and the consistency in the win rates. All right, it was 92, 88, 86% win rate, 92% win rate in the alerts. And these vary around depending upon the market. But again, his was June, pretty nice month. July, pretty nice month. August, not a great month. September, our only losing month. We had 8 wins and 5 losses. There was not very many high probability trades to take. We lost 1786 and 295 in the alerts. And these are the trades we took. And then we came back strong in October with 17 and 3, 85% win rate, up 74.48. So anyway, these are the kind of results that we get. All right, so important. This was November, but you don't have to see every single trade. You just know that we make money every month except for one last year. In this year, January 2025, we had 15 and 3 for 31.35. Now, if you've been trading, you know how difficult the last 2 or 3 months have been. February, 16 and 2, 3,800, 84 win rate, 89%, 83% win rate, 85% win rate in April, 11 and 2, 54.17 with 2,000 invested in each trade. Okay, I got a couple questions here. How would I use Compass for 0 DTE SPX trades? Well, I mean, you would use it the same way that you do for like the SPY. But now I would recommend on 0 DTEs, Thomas, and Namar's asking the same thing. Do I use 0 DTE? How many DTEs? The way I trade the indexes for this, what's called the SPY Super System methodology, when we're trading the SPY Super System software, and I'm trading the Qs, the SPY, the IWM, the SPX, the ES, the NQ, whatever I'm trading, up till about 1 o'clock in the afternoon, I'm using 0 DTE. I'm trading it because it's going to be a very quick trade off of a 5-minute chart. I trade 0 DTE. After about 1 o'clock or 1:30, I switch to 1 DTE. I switch to the next day. Not because I'm going to hold these overnight, okay? I do this not because I'm going to hold them overnight, but because I don't want to suffer too much time decay if we get a compression or a little bit of a pullback. So you're paying a little bit more for the options, but you're also protecting yourself a little bit, okay? And again, Thomas, that's the 0 DTE SPX trade. Same, you just put SPX in there, you use SPX, you make your entries based on that, but all the other indicators are going to be used exactly the same way. Larry, what's the difference between the MTF system versus the SPY? Oh, you're talking about the money flow tracker? Is that what you're talking about? I'm not sure if that's what you mean. Yeah, the money flow tracker. The money flow tracker runs on Ninja. It shows similar criteria. It looks at money flow, it looks at momentum, but it's looking at it differently. And most people that trade on Ninja are doing it on futures, and they're typically trading with different time setups. They're doing range charts, or Renko charts, or Unirenko charts, as opposed to 5-minute charts like I do. And I like the money flow tracker is a good piece of software for Ninja, but I trade futures, but I do it after hours. For trading regular indexes, the SPY, the Qs, the IWM, and stocks, I much prefer the SPY Super System software on thinkorswim. And one of the reasons I like trading stocks better, you use the SPY Super System software to trade intraday on stocks, is you can use relative strength and relative weakness. You don't have the ability to trade relative strength, relative weakness when you're trading off of futures. I mean, you can look at the ES versus the NQ, but I can't look at Tesla versus the SPY on there. So that's the difference to me. These intraday trades or swing trades, or what's the mixture? The trades that I showed you the results, it depends how many intraday trades and how many swing trades are going to be dependent upon the market. Now, these trades here are all trades that I posted in the room, okay? And anytime I post a trade in the room that's bullish or bearish, then the daily chart is going to align with that. So if I take a trade on Tesla, for example, like I did yesterday, if I take a trade long on Tesla, I'm only doing it because the daily chart's bullish. So if I get out of it and take a profit in it, but you can't because you're under PDTs, you still can hold on to the trade overnight because the initial criteria always said that the current time frame, well, it would have been the daily chart was bullish, in the compass system or the SPY super system on the daily was also bullish. All right, so both of those conditions were still intact, but I can't tell you exactly which one of these trades were intraday and which ones are overnight. I'd have to go back to my trade log on that. The SPY looks easier to understand. It is, Larry, to me it is, yeah. I think it is. Okay, so again, these are results for January, February, March, and April of this year. Again, we've consistently made money every month. These are not big, huge wins, but these are decent wins. All right, now I kind of want to just throw this in here. This is, people ask me what's an alert do? All right, so when you get an alert, this was the alert on Nike. You get an alert, it's going to have the date. It's going to say the symbol, Nike. It's going to tell you to buy. In this particular case, it's got to buy it. This tells you the expiration date, the April 11th, 67 puts for 285. That's all the first alert would have said. Then once we decided when we were going to sell it, you get another alert that tells you, again repeats what we did, and then it's going to have a sell order for $9, and then there'll be another one that will say, okay, they were sold on April 3rd for $9. That's what the alerts are going to look like. So you'll get an entry alert, you get an exit, at least one exit alert, and if the exit alert has to be changed, either raise the price or lower the price, you'll get an alert for that as well. Right, so you're going to get the stock symbol, the strike price, the option's expiration date, and the price to pay for the option. Right, that's all you really need. Okay, so again, how do we achieve these stunning results? I pretty much covered this already. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. When the institutions are driving a trade, the SPY Super System software does that for us. We only take trades when both of these are in our favor and allowing us to align our trades when the institutions are in the market. Now, I will take a trade when the institutions are in if my market internals, which I'm using, what I'm using is the comparative volume of stocks moving up versus stocks moving down. If this is neutral and the institutions are in the trade, I'll take it. I don't have to have the market internals in my favor, but it helps. Okay, that's how we find it. And again, the SPY Super System software identifies when institutions are creating a trend. We do what's called the triple screen assessment of momentum and trend. Also looks at money flow. The momentum to me is the key thing, and you have to understand how momentum is understood. We don't have in the momentum indicator that we have on our charts. This momentum indicator, this does not include divergence. It's just simply trend. We're just trading off trend, and so it's really important to understand that how a trend is identified, how momentum is identified. Momentum is identified by if you're looking at 5-minute candles and you have 4 5-minute candles in a row, if the close of each of those 5-minute candles is closer to the high of that 5-minute candle, that is momentum. If you have 4 green candles in a row, but the high is not getting closer to the close is not getting closer to the high of that candle, that is not momentum. So if you've got that situation across the 5-minute, in this case, the 5-minute, multi-time frame, the 5, the 15, and the 45, if they're all showing exactly the same momentum, then you've got institutions driving the trade. About 95, 96% of the time, it's institutions driving it. And you're looking at price action as well, and you can tell a lot from that. I mean, I do look at volume as well to see if we're getting some increased volume. All right, so there's the SPY Super System right here that I just went over earlier. All right, with the momentum, current time frame momentum, multi-time frame momentum, and the trend. All right, so I'm going to show you some trades here. And one other thing is, if you buy the SPY Super System software, you're going to get 2 templates. You're going to get this template here, and you're also going to get this template. You can use this for just intraday high volume trades or high speed trades on the SPY, the Qs, the IWM, or the futures, because all I'm using is the current time frame momentum. I don't care about the multi-time frame momentum when I'm only going to be in the trade 10 minutes. Okay, I only care about what's happening right now. So this was what the template looks like. You've got current time frame momentum, you've got VWAP, support resistance, you got the 15, support resistance, and you've got your pop out of the box symbols here which are compression breaking to the upside, compression breaking to the downside. You can see right here, this would have been a nice trade as it went from yellow to green, and it broke above the 15 with a pop out of the box. You take the trade right here, you write it up, and you exit. But this is, you would get this template and this template. You can flip flop them back and forth. All right, this was a SPY super system trade right here that we took on 221. This was an intraday trade. When I say SPY super system, I'm talking about trading the Qs, the IWM, or the SPY on a 5-minute chart. All right, but these were Heiken-Ashi candles. All right, so this is where we get in. You see the compression? We look down here, you see what we see? We see current time frame momentum going from buying to selling right there. We take a entry right there at the 15 EMA and a flat top candle. That's a Heiken-Ashi reversal candle, and we ride this thing down. And you just stay where you can just stay in this as long as it stays below the 15. Really a nice trade, but it's easy to see that we went from buying to selling. We had a breakdown on a Heiken-Ashi candle reversal, and we were below the 15 EMA and below the VWAP, of course, as well. Okay. Now, I'll just quickly run through these SPY super system results. Understand that the SPY super system methodology, there's a SPY super system software that gives us this methodology. This is the SPY super system trading the intraday Qs, SPYs, and IWM. These are the results we have off the 5-minute chart, taking very quick trades. Each one of these trades, you only have one on at a time, and they're very short. Okay, very short. So there's a lot of trades. There can be a lot of trades that come out. And again, these are trades that I took. These are not ones I post. I tell them about them in the room, but I can't post them. They're much too fast. But you can see we've had really, really good results here. August, 56 wins, 6 losses, 2 scratches, 8,200. September, 43 and 2, 7,100. So this is the results I get with the SPY super system. This is not included in the results that I showed here. All right, this is not included in any of that. This is completely separate. The room trades and the SPY super system trades are completely separate. Okay, and again, this was November, this was December. Really good results with this trade. I just kind of want to point that out. And this is the last quarter last year. This was the SPY super system intraday trades. This is for people who want to trade, very quick trades during the day. And they have the ability to do that either by trading futures or by having a margin account or a cash account. We had the SPY super system. We did 48.31 in October. In the room, we did 74.48. These are completely independent from each other. Right. So here's the room, SPY super system right here for November, the room, and December, SPY super system in the room. A lot of trades in December. There wasn't an awful lot of trades down here, but a lot of intraday trades. All right. So that was a pretty good quarter for both of these things, October through December, 24K in the SPY super system, 17K in the room. And again, I'm not trying to just brag about this thing. I want you to understand that when you've got the right software and you've got the right methodology, you can get really good results. Do I hide the box shaded area? The box shaded area. I'm not sure what you mean by that. JG, I don't know what you mean by the box shaded area. Oh, pop out of the box? Oh, well, the pop out of the box of these symbols here. There's a shaded area on the SPY super system that's called the dynamic compression zone. That's separate from the pop out of the boxes. The dynamic compression zone forms dynamically in the SPY super system. You may see a couple of them along here. Is the 2,000 invested based on stock or options? Well, Thomas, I'm treating this as options. Now you can trade stocks just as easily as you can trade options. If we see a trade that's a long, you can take stock in it. But how much you put into it is going to be dependent on the stock price. If I'm putting 2,000 into a trade, for example, and I'm buying options, if the options cost $2 a contract, $200 a contract, I'm going to take 10. If they're $100 a contract, I'm going to take 20. Can you tell me what my win rate is in the room and alert so far in 2024 as far as your average profit per trade? I'd have to go back and calculate that. what the room we've had. The room is, I mean, the alerts have been profitable every month. I don't know what the average, I have to go back and look and see what the average win rate is per trade, but the percentage win is it's almost exactly the same as the room most of the time. Sometimes it's actually a little better, but typically it runs between about 82 and 88% per month in the room, but you're going to have fewer trades. And again, we have had profits every single month in the room. So far this month, I think we've only had 3 trades in the room. We're up about $1,500. 50 Delta, Thomas. On the SPY super system, listen, it depends on what you're talking about here when you say 50 Delta. It depends on whether you're talking about a swing trade or an intraday trade on a SPY super system. On the SPY super system trade, I'm going to take an at the money or slightly in the money call or put. It's going to be like, you know, 1 strike in the money. All right. When I'm going out as a swing trade where I'm going to keep it on overnight or out 3 weeks, I'm going to be using a delta of around 65 to 75 delta on the ones that I'm in for a longer period of time. On the intraday SPY trades, are you trading the options of the underlying? Yeah, I'm trading. Those are all based on SPY puts and SPY calls, Q puts and Q calls. Those are all options. I mean, you could be trading the futures if you want to. It doesn't matter. But I'm just trading the actual SPY calls and puts. Options of the underlying. Yeah, I'm trading the options. I'm not buying SPY stock. I'm buying SPY calls. Because listen, the whole idea of using options is to leverage. But some people like to use trade stocks. And sometimes the stock doesn't really give you a good ability to trade an option because the options are not very tradable. They're not liquid enough. Then you can trade stock if you want to. All right. So here's again, I'm going to show you a few SPY super system trades that you can see. And again, this chart is just meant to show that for the SPY super system trades, which are the intraday trades, right, on the SPY Qs and IWM, using the SPY super system software. I understand this can be a little confusing. The SPY super system software is right, what you're seeing right here. The methodology is what's called the SPY super system. But here we have the current time frame momentum goes from red to blue, selling to buying. We buy it right here as the stock breaks above the VWAP, right? As the institutions come in and buy it, and we just ride this thing up, all right, for $220 a contract. That's a lot. Most of the SPY trades don't last that long. They don't produce that much profit. Usually they produce profits more in the 80 to 90 to $150 a contract price profit. Right, this was a SPY super system for $225 right here. $90 profit in the SPY super system. Short, again, I took it here it was already red down here. It went from yellow, which was bearish, to red, which was even more bearish. But I took it here because I waited for a break below the compression as they got to pop out of the box below the 15. I took it here and I get out here. One candle, 2 candles actually. All right. So these were Heiken-Ashi candles. So that was my entry right there. Heiken-Ashi reversal. Take the trade right here. Everything's red. $90 contract on the spot right there. Just so these will give you some ideas of what we're trading. This is the same thing using the other template. It just has the current time frame momentum only. All right. And this is for intraday stuff here now. This is not the swing trades. We'll look at a couple of those in just a minute. All right, this is again what you can see here. You can see we got current time frame momentum. See how it went yellow right here? I can't really take it right there. I've got to wait until this candle to take it. Once this candle forms, then I can take it and I get out right there. And again, another SPY super system trader. I'm going to throw these up on the screen so you can see them. Again, you see the 15 EMA right there. Remember, that's the support resistance level. Take it right there. There you go. Enter it here, out of here. $130 a contract on the SPY super system on these. It's really important to get in very close to support or resistance because now your stop to the downside is very small. You're not going to lose as much as if you try to chase it up. You don't want to be taking it up here. You want to be taking it down here. Okay, this was an IWM, a fairly small profit. Get in here. You see, it went from selling yellow to buying blue. So institutions are in. The price doesn't do much. You're basically sitting in this thing for 4, 5, 6 candles waiting for something to happen, and then it finally breaks out. but you're still above the 15. You haven't broken below your stop, so you stay in it. Okay, another one here. This was another nice one. Again, you see how it breaks down right here. The IWM 15 is the VWAP and the 15. It breaks below them with a pop out of the box. Everything's red. Institutions are selling. You write it down. Now it needs to stay below this 15 EMA, and it did. It stayed below 15 EMA, so right here. So once you start getting this kind of action right here, you're out. See, it's starting to get momentum starting to fade. So you look to get out of the trade, stay selling, and then it switch back to buying again. All right. So again, there's a few more. I'm not going to go over every single one of these. You can see the results from these things, but all you're looking at is the current time frame momentum and a break above the VWAP or the 15. Right? There's another one here. So you notice this one, I didn't put any arrows on. You notice this is red. You can't buy. Goes to blue. Can you buy it here? You cannot. It's below the VWAP. You wait till it breaks above the VWAP and take it right there. That's your entry on that trade. Everything stays buying and you're out. You're out as soon as you get a red candle up there. Okay. This is one I took just so you can see. I actually traded this both ways. I traded this to the downside as we have the current time frame momentum went red from buying to selling, and it broke below the VWAP with a pop out of the box symbol. I take it here. It comes down. I'm out here. All right. Still red, but I'm out on this candle. Then it starts to break back up again, and I break above the VWAP right here as it goes from selling to buying. The institutions are back in again. I take it here and I ride this thing up until it gets right to the pivot point, and then I get out of the trade. Okay, so those are the SPY super system trades. I think that's probably enough of them. Let's take a look at this. These are some of the recent trades showing examples. These are high probability trading setups. Right? This was Nike. This was the one I had mentioned. Okay, this is Nike. This is when we took this on right here on the 28th. Took it here as it broke down. You see this? See this breakdown? See how the institutions are selling the heck out of this? Current time frame momentum and multi-time frame momentum both needed to be red or yellow, which they were. All right, so I take it right here, and we stay in it. And some people actually took some profits here, but I stayed in it because it stayed red. Everything was red. It wasn't. I was using the 15 on the daily chart. I wasn't. The VWAP is not used on the daily chart. It comes here, and then we got that flush down because of the tariffs. This is where we took our profits. I mean, that was a really that's the one we made 216% on. Sarepta is another one we were in. We come in on the 28th right here. You notice everything's red. It's all being sold. So I mean, you feel pretty comfortable that the institutions are selling this. Look at how long they've been selling it. We stayed in this thing, and then we got this breakdown again, just like we did on Nike, and we took a nice profit in Sarepta. This was a long we had in HIMS back in February. I took it here. I probably could have taken it way back here. I don't know why I missed this, but I did miss the entry. The best entry on this daily was basically right here as everything went green. Notice this was green, but the multi-time frame was yellow. I have to wait for this to turn green. So it did turn green, but this is where I should have taken it, but I took it here. And I'm looking at lots of other different trades. And we rode this thing up. We got 25% on this trade, and I left a runner on, and the runner, I caught the runner on this big move here. And the runner went from 25% profit to 269%. But when I put it in our records, when I put it in my stats on how the room did, I posted it as 25%. Palantir, another nice long here. See, current time frame momentum, yellow, selling, green, buying, multi-time frames already green. We even had a green trend. We take it here. We're in this thing for 2 days. We get a 31% profit in Palantir. This was Lulu. This was when we took this overnight. This was our earnings. We didn't take it here. We took it here as a break compression. Notice we went from blue buying on the multi-time frame to red, yellow selling at the multi-time frame. This is telling us what the institutions are doing based on momentum. This tells us, okay, now I can go short. I take it, RIN overnight, in for 192, out for 300. Okay, and this was a intraday trade on Amazon using the SPY Super System software and the SPY Super System methodology. Because what we're doing here is we're buying Amazon as it breaks above the 15. We've got current time frame momentum green because I'm only interested in current time frame, if I'm only going to stay in this for a short period of time, 10 or 15 or 20 minutes, we take it here as I get a pop out of the box symbol telling me the stock's breaking compression. I stay in it, and I'm in it for 45 minutes, and I'm out for 32% profit. See, the institutions kept on buying, kept on buying. All right, and again, this was the NPH. This is a short, just to show you the same thing. Again, these are swing type trades. This was set up, we took it on a 5-minute chart, and I took this on an intraday chart, but you could have taken this and held it overnight. So again, here's a pop out of the box as the stock compresses. It breaks below the 15, down it goes, and we take out 20% in an hour. And here's Verizon, 50% in an hour on an intraday trade as it breaks below the VWAP with a pop out of the box. Institutions are selling. Not hard to see. All right. And this was Tesla. This was one we had for an overnight trade. This was another big trade, but we took it and held it overnight. As we get in here, came pop out of the box in the 5-minute. Everything is red and yellow. The institutions are selling it. It fell from 120 to 112, and nice trade on that one. All right. So that kind of covers the charts. And again, it's important to understand that all these results are being driven by the SPY Super System software. The SPY Super System software is telling us what the institutions are doing, and what the institutions are doing is what's going to determine whether you have profitable trades or losing trades. If you're trading stocks and you don't know if the institutions are in there or not, as I said early in the presentation, you're gambling. You don't know. You're looking at technicals as best you can, but you're missing the main element of what's driving that particular stock. All right, so that's why that SPY Super System is so important. Is a scanner included? Yeah, there's about 6 scanners included, Stephen. I'll show you a couple of them here when I get done on the SPY Super System. We look for relative strength, relative weakness. We look for pop out of the box symbols up and down. There's several different ones that you can use. I also use scanners in TC2000 a lot. Okay. All right, so that's the software. That's the strategies that we use in the room. These are the strategies we use, and I have videos on all of these. I've been doing a lot of straddles and strangles lately because we've had a lot of gaps up and down. I don't know which way the stock is going to go, but if you do a straddle or a strangle and the stock gaps up or gaps down, you make money. You don't care which direction it goes. So I'm doing a lot of these. I also do some debit spreads. I've done some time spreads. We had a couple of really nice time spreads in the last 2 weeks. And I haven't done any of these lately. I did one, but very few of these lately. And I do a lot of SPY Super System trades. Some days you don't really have any setups. I only did, I think, 1 on Friday. But some days you can get 5 or 6. All right. So this is what the offers are for here, and these are really, really good offers. But I'll show you the 3 things. You can join the room in the alert service. All right. Now you can do a 2-week trial on this if you want. All right. It gives you the trading room. It gives you the alert service. It gives you all my modules, all the training videos. There's about 30 of them for free for 2 weeks, and then it'll switch over to a quarterly subscription at $396. And of course you can cancel if you don't want to do that. Right? That's the way to get in if you want to tippy toe in. If you want to get the best price, then what you want to do is you want to get into the room and the alert service for a year, because it's cheap. It's compared to the quarterly. It's $11.96 for a year. You're going to get the alert service. You're going to get the room that I'm in, and again, I'm there every day from market open to our market close. I keep the SPY Super System software up all day long, and I post charts up there that people are asking about. I show you stocks that I think look good for long, look good for short. I've got members that are posting trades that they think they like me to look at. We're doing education all day long. So except for taking lunch, I'm in there talking most of the day. And then you also get the alert service. And there's also a private Discord chat community where we have 2 other professional traders that are looking for the same things I am. They're looking for high probability trade setups. They post information on what the sectors are doing. They post information on economic news, etc. And of course, you get all the videos, the training videos. And you can also do a one-time payment and get this thing for $24.96 forever. You never have to re-up. All right, so that's the trading room and the alert service. Now, the last thing is the system. This is the SPY Super System. This is the software. And this is a driver of what is producing our profitability. All right, you can get it and you can put it on Thinkorswim. Rightline will put it on your computer for you. You don't have to buy Thinkorswim. You can trade wherever you want, but you use Thinkorswim to install the SPY Super System software. Again, it gives you the Compass trading system plus a bunch of scanners, and you get the master class on the trading. Rightline will take over your computer and put the software on it. It'll put the Thinkorswim software. It'll put the SPY Super System software on your Thinkorswim platform, which you can download for free, and it'll look exactly like mine. You'll get any updates, any changes that we make, any new scanners. You'll get all of those for a year, and you also get a month in the options, my options trading room, and a month of the alert service, all for $14.98. And this thing, I would be lost without the SPY Super System software. I tell you, it made a big, my win rate, which had always been pretty good. I had win rates of 78 to 82%. This moved it up to between 88 and 92% overall. Big difference, big difference. All right, or you can get a one-time offer here on the SPY Super System software for $500 more. You can get it forever. You never have to re-up on these things. Okay, so very good. This is a really, really good deal. And again, this, as I said before at the beginning, I kind of likened this to playing blackjack as a card counter and without being a card counter. Without being a card counter, you lose money playing blackjack. When you're able to count cards and know what the composition of the rest of the deck is, you make money. And that's the difference. That's what I did for a living for a while. So this is what this basically is, your card counting system for knowing whether the institutions are in the trade or not. And it's really, really a really good offer. So there you have it, the 2-week free trial for the room and the alert service. You don't get the software, but the room and the alert service, where I display the software all day long. And this would be the room and the alert service if you get it cheaper. You get it for a year, or you can get it for one-time payment. This is to me, this is the best deal that you can get. You get the room, the alert service, all of the being in the room anytime you want to be, and you can come in the room for a couple of hours and trade SPY Super System trades and leave, and then come back again in the afternoon. You have the ability to do all of that, right? And then the SPY Super System software. Again, this is the key. This is what drives all of the results. These great results we have. This is what drives it. Being able to see that information. All right, and I'll go show you. Somebody asked about seeing the scanner, so I'll show you the scanner. Here's some of this. This is the SPY Super System here. These are the scans. This is a cascading. This is one of them. This is a cascading up scan. This shows you stocks that are stacking 3 green candles on a 5-minute chart. It's cascading down 3 red candles on a 5-minute chart. If the market is moving sideways and down, this becomes a beautiful way to find stocks that got relative strength, and vice versa right here. Right? If the market's moving up and you get stocks that are cascading down, this shows you stocks that are relatively weak. Now you have to look at the daily chart to make sure that they have the setup that you want for the trade. But if you just click on these, it's going to bring up the chart. If Thinkorswim was actually running, which it is, I think. Again, they're doing maintenance today, so things are going to be a little bit squirrely over there in the TOS world. But so that's what happens. And again, here's the futures. This is ES. Yeah, they're doing maintenance now, so I can't really show you anything very good live. All right, so those are your offers. I look forward to seeing some folks in the room and on the alert service pretty soon. And thank you very much for spending a Saturday here with me. I appreciate that. Have a great weekend. See you on Monday.